Let's bring in Robert Wetenhall, Bob Wetenhall of RBC Capital Markets. Come on in here and say something positive about housing. You have a buy on KB Homes. Why? Is it just it's so cheap it's time to buy?
No. In general, we're kind of bearish on the outlook for the housing sector, particularly going into the first half of the year. We think volume trends could accelerate in the second half. The key point with KB Homes is they have a new CFO who came from Federal Mogul. We think he's going to be very effective in reducing SG&A expense.
Let's bring up here new home sales. Forget about the KB Home chart here. New home sales. Here it is. New home sales off a cliff. I don't think we can bring this chart up enough. You can see it down here, Bob.
Yeah.
And up we go, down we go. We're at the bottom of the cliff. What's it going to take to jumpstart it? Besides my simple economic phrase, we got to clear the market.
I think you're right. Clearing the market is the first step to realigning the imbalance between supply and demand. And there's nothing on the near-term horizon that's going to be constructive to get us there.
Can price clear the market alone?
Price has to go down probably by 5 to 15% nationwide to restore some kind of balance.
Break exclusive there. That's a 5 to 15%, which is 10%. But you're even putting an outlier on that past a negative 10%.
Yeah, we're real bearish. If you look at historical levels of supply and you compound that by the inventory overhang, you got roughly somewhere between 6 and 7 million homes in foreclosure or delinquency on mortgages. Huge excess supply. Only way that's going to clear is if prices go down.
Can government policy jumpstart that, or is it just about sellers catching up with buyers?
Actually, I think government policy is disruptive at this stage. You saw the disruptive factor in demand with the tax incentive last year in the first half, and that led to a really bad second half. So I'm not too optimistic that the government is the solution.
Let's look at KB Homes. I mean, we had Hovnanian on here the other day, Era Hovnanian. Bring up the chart here. Housing in a search of, what did I write? In search of recovery. Yeah. Okay, there's KB Homes. God, it was great. When you think of the housing business recovering in the next 5 years, what does that mean? Is that like we go up 5%, or can we get some real oomph to it?
Yeah, just to frame things in context, we're looking for new home starts to be around 625,000 in the current year. More consensus expectations are closer to 675,000. So we think there's still too much optimism. Low interest rates, like you just cited, the 10-year, aren't having any effect on spurring buying. And if you see rates pick up or more stringent mortgage standards, you're going to have continued pressure on the demand side as well.
I mean, the affordability index, and we've put it up a bunch of times, and that when you talk to the builders in general, what are they focused on besides, as you mentioned before, cutting costs? Are they focused on land? Is it a question of labor? Is it it's
a question of demand, continued high levels of unemployment, and lack of consumer confidence, which is gradually grinding higher, really need to go in the same direction. You need improvement in both metrics for the buyer, for traffic to return, for demand to pick up.
I like how you cover different areas. You still do education, right?
Sure do.
I've got to ask you about this. Let's bring up this chart, folks. COCO's a symbol, COCO, Corinthian College. I'm sorry, they get an F. You've got to buy on this thing, right?
Yeah, we were the probably most bearish sell-side analyst on the street for a long time. The former CEO returned in December. We think he's confronting some pretty material problems. This is really an issue of extremely low expectations, which are overstated. They're making some headway in a number of business metrics. A lot of people thought these guys were going away. Yeah. I'm taking the other side of the bet. They're going to be around.
Why are they going to be around? I mean, with all the colleges out there, and particularly here in the East, there's focus on like 12 schools or 20, the silliness of the Northeast. But it's a big world, and there's a lot of really good institutions, whether it's like go there or do it, external or whatever. Where do these guys fit in? Where does the education, publicly traded industry, where does that fit into the mix?
Sure. On the big picture, stepping back for a minute, you're 18 million college students. Probably 1 million to 1,250,000 are non-traditional students who are currently working or unemployed, but they're between 25 and 40 years old. They don't live on campus. They don't go to frat parties. They're already employed, and they're looking, how can I move up the ladder?
Are you implying that I went to frat parties when I was in school?
It's not a bad thing.
Yeah, I do have a vague recollection. It was a long time ago. But the answer is these guys can survive.
They're going to survive. They can do somewhere between 50 and 75 cents on a normalized basis. We like the stock below $5. There's regulatory news and developments coming out sometime in the first half of the year. And if the Department of Education's policies are less onerous than current expectations, this is the best way to play that outcome.
Okay, maybe they'll get a quality C. Bob Weatherall, thank you so much.